Microsoft is next. Of course, software founded by Bill Gates. We're talking Microsoft Office, the Windows Server products, and then, of course, Azure, which is their global hosting, web hosting business. Market capitalization, $537.3 billion. That's about as much as the GDP of a third world country. Price to earnings ratio of 30.6. It is a dividend payer, 2.25% yield. What can we say about these guys? Done a brilliant conversion under Satya Nadella from a company that looked a bit tired to one which now has massive annuity income.
Yeah, I think the market was a little bit concerned that we have seen a boom in technology, and they were a little bit behind. They missed the whole mobile revolution, didn't really get their software onto mobile devices. They bought Nokia, attempted to get into the market. That didn't really take off. But what we have seen under Satya Nadella, I think, is a transformation of the business more to the way the cloud and the internet is allowing you to serve up software. So moving to software as a service, subscription-based model, and their core software, Windows 10 has been very successful.
That's for the operating systems on Windows-based machines.
That's right, which works on both a desktop-based machine and a mobile device fairly well. But also importantly, Office 365 is their new subscription-based model.
Because people used to buy that and then keep it and then upgrade and so on and so forth. It was quite hard for them to capture that. People used to borrow each other's software and get it unlocked and all that. But now basically it's inevitable. Everybody's gone to either a monthly or an annual fee, and that is huge because with that installed base, and as we know, the Office suite, Excel, PowerPoint, Word, it's just ubiquitous. If you haven't got that, well, what are you going to do? You can't exchange files with people.
No, and we've seen Google attempt to come in with an offering, and it hasn't really worked.
I don't even know what those programs are called. And similarly, the Apple ones.
Exactly. So they remain a very important part of the computing area. And then what's been a big revelation has been this introduction of Azure, their cloud-based offering. Because they have a massive client base, massive corporations already using Microsoft. If they've bought into that, now they can offer them storage, hosting, processing power, and they can move more and more of their computing infrastructure onto the Azure
platform. So they're number 2,
platform.
is that right? Azure after Amazon Web Services.
Yes, yeah. So around, I think, a 10% market share. So
let's look at the share chart. So that looks just about as good as Google's on a 5-year basis. Although interestingly, there it is at $69. It was, of course, quite early on a big mover, and it is in 2007, I think, that it reached something in the region of, say, $57. So at that point, it was already, $58 in December of 1999. You can't see that on the chart. Then it had a big fall off. And then it has since rallied hard.
So I mean, the tech bubble, the last tech bubble, which I guess some people may remember in 2000.
That's even earlier.
And that's when they peaked.
Oh no, I'm talking nonsense. I'm confusing myself. December 1999. That's when it was the highest, not 2007.
No, so that was where there was so much optimism about, and that was really driven by the internet, and that these companies were all going to do everything. So, but what you see with revolutionary technologies in the short term, the market tends to overestimate their potential, but in the long term actually underestimate their potential. And that's really where I think we are.
Because then if people had held them then they went down after the dot-com meltdown. But if they'd just been patient, they would have now been firmly in profit. Although you would have had to have pretty strong resolve, I think, to have held them all the way from the mid-90s all the way till now.
Yeah, so timing does make a difference. I mean, there were points where it was, when the market was very depressed. I think the point is don't buy maximum optimism, and I guess that's what we need to be guarded against now.
That's what I want to ask you next, hot or not, because right now everybody loves them. There's lots of positive earnings drivers. The rating isn't, too tremendously demanding. So you're going to be hot on this one? Again,
I think they're in the right place at the right time with the Azure services, and I don't think people are moving away from Microsoft Office, so still hot.
Yep, I'm going to go and join you with that. So I feel a little bad. We've never owned this one in any of the portfolios. A couple of clients that own them, but I personally don't own them at the moment.